start recording. Okay. So thank you for your positive response to our invitation and for making the time to attend the launch of Fola's book titled Banking Regulation in Africa, the Case of Nigeria and Other Emerging Economies, which was published by Routledge in 2021. I'm your host for today. My name is Bolanle Adebola. I'm an associate professor at the School of Law, University of Reading, and I'm the convener for the Commercial Law Research Network Nigeria, which is better known perhaps by its acronym CLRNN. As convener of CLRNN, I thought that it would not be out of place for me to speak briefly about our network to start. CLRNN is a network established to promote knowledge and research exchange on matters relating to the development and reform of commercial law in emerging countries such as Nigeria. It responds to the challenges that these countries face in designing effective commercial laws that fit both their realities and the interconnected global systems in which they exist. Now, we do this through three principal means. First, we create a collaborative environment in which researchers with expert knowledge of the international and Nigerian contexts can interact with stakeholders who deal with the practicalities and consequences of reform. The goal is to shape reform policies, and our several events can be found via our dissemination points such as YouTube and the website. Second, we create an ecosystem through which high-quality research can be facilitated. We have, for example, been holding a monthly seminar series called The Spotlight, which has resulted in publications. And again, you can find some of these via our website. Third, we provide an access point to informed contextual research on commercial law in Nigeria. So we typically host peer-reviewed blogs weekly. You can watch out via Twitter for what I like to describe as our CLRNN Fridays, which is where we disseminate our blogs. Today, I'm especially proud to host the launch of Fola's book. Fola is part of the broad CLRNN family, and I've known her since her frantic student days. I was thinking perhaps I should start by embarrassing her with a few stories about the calls I used to receive to review drafts of the thesis that forms the basis of the book. But seeing as she's not giving us food and drink, I won't tell you the stories today. I'll hold them for when she decides, to feed us and the information can flow or the stories can flow freely. Now, Fola is also my colleague. She's a lecturer at the School of Law at the University of Reading. And here she teaches both company law and banking law. Her jurisdictions of interest are Nigeria and the UK. And she has published in the fields of banking and financial regulation and has specific interests in bank insolvency, company law, and whistleblower protection. Her most recent article was published in the Journal of Business Law in 2020. And in that article, she considered whether whistleblowers were adequately protected under the Public Interest Disclosure Act 1998. Fola has also been invited to contribute chapters to a forthcoming book on commercial law to be published by Edward Elgar later this year. She's also the co-editor of a forthcoming monograph titled Bank Insolvency Law in Developing Economies, a treatise of selected African and Middle Eastern countries to be published by Routledge also later this year. But today we're here to celebrate the monograph that she published in December 2021, as you know, titled Banking Regulation in Africa, the Case of Nigeria and Other Emerging Economies. The book examines the effectiveness of banking regulation in Nigeria. It unpacks the historical underpinnings of the regulatory framework, setting out the challenges that beset the chosen approach. The book trawls through the regulatory experiences and frameworks of other economies at different stages of sophistication from which she draws insight. In the typical CLRNN way, she argues against transplantation of these frameworks, but acknowledges the positive principles from which to draw. Now, we are delighted to be joined by a stellar panel of speakers who will provide us with critical insights into the core themes of the book. The panel comprises Dr. Femi Amao, who is a reader in law, Sussex Law School at the University of Sussex, Professor Andy Campbell, Emeritus Professor of International Banking and Finance Law at the School of Law, University of Leeds, and Ms. Ibukun Omishere, who is a doctoral researcher at the School of Law at the University of Leeds. Now, while the first two speakers will unpack the book and the broader regulatory context, Ibukun will take us into a different but related direction as she highlights relevant governance issues. Now, before the panel gets to speak, we have our keynote to be delivered by the highly esteemed Professor Onyeka Osuji, Professor of Law at the University of Essex. While Professor Osuji clears his throat and readies himself, gets a sip of water, I will set out the agenda for the rest of the event and some housekeeping rules. After the keynote, we will take a couple of questions, if we have any, for Professor Osuji. Then I will introduce the panelists in detail. Professor Mao will speak first, followed by Professor Campbell, and then Ibukun will bring up, she'll take the team home by expanding our thoughts into the governance dimension. We will thereafter take questions for Fola and the panel. After we're done with the panel, Fola will provide us a short statement to wrap things up. Please remember to keep your video switched on, but to turn off your microphones. So I will introduce Professor Onyeka. Professor Onyeka Osuji is a professor of law at the School of Law, University of Essex. While he has made significant contributions to legal scholarship, his distinctly interdisciplinary approach has delivered a wide range of scholarly contributions and earned him his esteem. Professor Osuji has published extensively in the areas of corporate governance, corporate social responsibility, globalization, regulation, consumer protection, social and non-financial reporting, banking and asset management, as well as multinational enterprises. His AHRC funded a technological licensing framework for 3D printed content, a focus on China, was cited by Baroness Neville Rolfe, the then Minister for Intellectual Property. Professor Osuji is a permanent fixture on conference and similar circuits in this field. So I'm sure if you haven't had the opportunities to hear him present, you will sometime soon. Professor Osuji is a fellow of the Higher Education Academy and a member of the editorial advisory board of the Social Responsibility Journal. He's a member of the College of Advisors of the Global Principles for Sustainable Securities Lending and the Sustainable Finance, the Law and Stakeholders Network. Professor Osuji obtained a PhD in law from the University of Manchester as a School of Law scholar and a BCL from the University of Oxford as a Shell Centenary FCO Chevening scholar. He has an LLB from the University of Nigeria, Nsukka, where he graduated as the best student of the Faculty of Law. He's also a barrister law with a degree from the Nigerian Law School, and he was awarded the best overall performance, second prize, and 2 prizes in legal drafting and conveyancing. I'm sure by now you must all be excited to hear this keynote from Professor Osuji. Professor, over to you.
Thank you very much, Bola, and the rest of the Commercial Law Research Network Nigeria for inviting me to this occasion. And I'm very happy to be here. But before starting, I also wish to congratulate Fola on the publication of her book, Banking Regulation in Africa, the Case of Nigeria and Other Emerging Economies. I've actually been able to read the book in advance, and I was quite comfortable reading the book because it ties in with what I will talk about today. The topic of my presentation is corporate responsibility of banking and banking regulation in developing and emerging markets. Just to start off from where Bola stopped, Fowler's book was talking about the need for us to understand about different paradigms, but as well as understand that the context may be different, particularly in the case of emerging and developing markets. So this is where I'm coming in. When I was asked to give this presentation, I can't remember when, maybe before Russia invaded Ukraine or around the time. But definitely, I think it happened before financial institutions joined other businesses in pulling out or downgrading their, I think there is an issue with my laptop, sorry. Let me see what goes, okay. In downgrading their operations in Russia. So example, on March 10, 2022, Goldman Sachs said, because of regulations, they were pulling out of Russia. JP Morgan Chase also said they were getting out of Russia and other financial institutions. I know some from the UK, HSBC, for instance, as well. So it made me to think, what is actually banking regulation? Because these organizations are all referring to regulations. What does it mean? So as I was thinking, what is banking regulation? What is the responsibility of a bank in this situation? What is the connection of banking to what Putin is doing in Ukraine? What is the connection? But at the same time, I remember this quotation here. This is almost a 300 years old quotation, which you can see on that slide, that everything must be at rest, which has no force to impel it. So, in other words, any movement, any action must have some other force pushing it. So whatever it is, what is that force? So before continuing, before we get back to what those banks were doing, or they are still doing in Russia, getting out of Russia, let's look at the traditional conceptions of banking regulation. So in general, we look at things like prudential regulation, looking at how banks are managed, individual banks in terms of micro-prudential regulation. A group of banks within a jurisdiction in terms of macro-prudential regulation. We also know about systemic regulation, where one is talking about the financial system as a whole. And there is a third leg of banking regulation, the conduct of banking operations, how you do business, and possibly how you affect some stakeholders. In the case of UK, as we're going to see in a moment, consumers. Hence, we have the Financial Conduct Authority. So when people look at banking regulation in the traditional sense, we see discussions around the regulation, self-regulation, command and control, whether things can be prescriptive, and then a big debate about rules or principles. And to what extent regulation can be via the government or formal agencies, as well as practitioners in the industry, and a lot of literature on alternative regulation methods. So different things we can do, but everything points to one area, which is the financial system, the financial status of individual banks or banks as a whole within a jurisdiction. And if you go back to 2013, following the global financial crisis, one of the reports that came out from the Parliamentary Commission on Banking Standards. So in the case of one particular bank, the commission pointed out that the issues were mostly about a failure of regulation, colossal failure of management, reckless lending. So everything is tied to financial decisions, financial status. So that is how banking regulation is seen. So banks should remain financially viable. So just as a quick example, the UK Financial Services Act reflects the traditional conceptions of banking regulation. So if you look on the left-hand side, the Prudential Regulation Authority, which you can see from the name, is about prudential regulation. And if you look there, I've highlighted the focus on financial status, financial stability in yellow. In blue, I've also highlighted the focus on UK. So if you look at the legal provisions, if you are going to regulate UK banks, you are looking at the UK financial system. On the right-hand side of the screen, you will see the Financial Conduct Authority. From the name again, you will also notice it is about the conduct of financial banks and financial institutions. The consequences of those aspects of the conduct in UK. So you have UK highlighted in blue. And down there is a focus on consumers, protecting consumers in terms of the conduct of UK banks. So that's how we see banking regulation, as we can see from those legal provisions or statutory provisions. But if you go back to, let me go back again to what happened or what is still happening. This is about Russia invading Ukraine. How does it concern the UK financial system? How does it concern the UK consumer? But some of the banks have pulled out and are still unwinding their operations in Russia, citing regulations, citing their responsibility. So it made me to think, okay, what exactly is business responsibility? What does it mean? I see responsibility as involving two components. One is about the primary rules of behavior, standards of behavior. And on the other side, the consequences for following or not following those rules of behavior or standards of behavior. That is how I see responsibility in general. So if you are talking about a business or a banking business, so the rules of behavior concerning a banking business and the consequences. So that is how I would see the banking business responsibility. And if you understand it that way, you will also see that those rules of behavior can have different sources. So the sources can be from the strictly financial aspect, the economic aspect. It can be from the law, trying to follow legal provisions, or from the ethical aspect. In everything, the connection there is that the bank or the banking business is part of society. So those rules of behavior are tied to the society in which the bank is operating or the bank is doing its business. So that's what we can see using the example of the actions of those banks in Russia. Some of them pulled out, not because there was any particular regulation that said, now you have to get out of Russia, like other businesses, but they were still citing regulations. Everyone's noticed that it didn't look good if you continue to make money. But going back to the traditional conceptions of banking regulation, the bank is supposed to survive financially. That should be the aim. But now some of those banks made decisions that might be in the short term, in the medium term, not financially profitable. So that also takes us to corporate social responsibility. So the idea that beyond law or legal requirements, a business has some responsibilities expected of that business by society. And I've cited the case of Palestine Solidarity Campaign and Secretary of State, just to give an indication that for a business, decisions are not only economic or financial, they can also be social. They can also be due to social, environmental, political, or moral considerations. Those are all parts of the business responsibility. So the social aspect, the environmental aspect, the political aspect, or the moral aspect. So if you're a bank, you are also a business, like any other business. So you're expected to follow the social, the environmental, the political, or moral aspects of your responsibility. I'm not going to spend a lot of time on corporate social responsibility, but all I can note for the moment is that corporate social responsibility is also a potential tool or technique for regulation of business, including banks. So going back to Russia's invasion of Ukraine, one thing to point out is that it highlights that the relationship between regulation and responsibility of banks is a complex one. It is a complex one. And that complexity can be seen in the broad conception of responsibility of banks. So not taking decisions based on financial factors alone. There is also some idea of gatekeeper responsibility, which I'm going to talk about in a moment, which is even if you are an innocent person, if you have the power and influence to prevent a wrongdoer from undertaking a wrongful action or continuing with a wrongful action, then you have that responsibility to use your power and influence to stop the wrongdoer. The other point I can see from what is happening is that it shows that banking regulation is context specific. So the time before now, I think this is the first time banks have been forced to pull out without express regulations in place in some countries because of another country's invasion of their neighbor. So the time, the place, the actors involved, some people might say, oh, but there have been other invasions of other countries, but this hasn't happened. So the time, the place, the actors, the stakeholders involved can determine what banking regulation means, what banking responsibility means. And that can also mean that beyond the financial aspects, a bank may be expected to be part of public governance, take decisions that can be seen as governmental, like some other businesses as well, using their power and influence. Another point to note is that beyond those traditional conceptions of banking or regulation, one can see embedded in some ideas of society, so particular societies, particular national interests, some ideological interests in place. So to think that banking regulation is neutral may be far from the truth or the correct position. Another point to note there is the steers, the regulation steers for banking go beyond formal institutions. So using the example of the UK and the US banks, the Prudential Authority, the Financial Conduct Authority, and their respective organizations in the US didn't make any pronouncement before those banks acted. But those banks acted out of obligation, out of the need to comply with regulations. And this was before sanctions were being imposed by various governments on Russia. And the other point, I think the other point one can note here is the role of transnational coordination in banking regulation. So banking regulation cannot be seen as simply a matter for different national jurisdictions. To be effective, transnational coordination, particularly for countries sharing the same region, the same geography, the same interests, the same ideology, it can be helpful to have some coordinated approach. So what are the lessons? I think the first lesson there is where I started. The concept of regulation should be seen as occurring beyond formal institutions. So even if it is banks we're talking about, to understand the regulation of banks, one has to go beyond thinking of government agencies, central banks, financial conduct authority, those with formal powers, formal institutions, and to also use the broader notion of regulation to understand banks, their behavior, and their regulation. So if one understands it that way, one can also move on to see that the responsibility of banks can go beyond simply financial stability. Likewise, the regulation of banks can go beyond the assurance of financial stability. It can extend to some issues of public governance without destroying the idea of bank and the idea of banking. And one can also deploy corporate social responsibility, use the law, use other means to deploy a corporate social responsibility as a method for regulating banks. And very importantly, to understand contextualism, your context. What do you need? What do you want in your jurisdiction, in your society? Not what someone else wants, not what someone else needs, or their idea, or their ideology. You can also understand your society, understand your context, and based on that, try to regulate the banks or try to understand the responsibility of the bank. I gave one example there. In 2009, the global financial crisis happened. At the same time, some Nigerian banks failed. If you go back to study the causes of the failure of the Nigerian banks, yes, some of them were about credit-related factors, like the global financial crisis. But at the same time, a lot has to do with the role of politically exposed persons. So that context matters. If you want to regulate banks in Nigeria, for example, if you don't spend time to understand the role of politically exposed persons, then your regulations are unlikely to work, no matter the international best standards you are using. So that's one example. And another point is institutionalism, just understanding that institutions in society can involve formal and informal institutions. Okay, another, in terms of contextualist approach, being able to see who your stakeholder is important. Who is your stakeholder in your jurisdiction? In the UK focused more on consumers in the Financial Conduct Authority provisions. In any other jurisdiction, you may decide who your stakeholders should be. And national self-interest should be clear in regulating the banks. So, like we've seen in what is happening in Russia, national interest is a key factor. So countries are pulling out, some are not. So you have to be able to define your national interest. And defining your national interest in the regulation will also enable you to join up with other jurisdictions with similar interests. And the more you're able to coordinate your regulations, the more effective you may be. And for us as scholars, it can also mean introducing different perspectives in understanding banking regulation. So nothing stops us from thinking the third world approaches to international law, new regionalism, using some of the insights from those theoretical models to understand issues in banking, to propose solutions. I will end with the last point, which is gatekeeper responsibility. I wanted to have it as a different slide just because we are talking about developing and emerging markets. And I've talked about contextualism. So, like I said earlier, gatekeeper responsibility is about even an innocent person having responsibility to stop a wrongdoer from doing the wrong thing or continuing to do it. So the banks that pulled out from Russia are trying to make Putin to stop the wrongful actions he's undertaking in Ukraine. So they feel that sense of responsibility. So in different jurisdictions, being able to see some of the wrongful actions. One example I've given here is stolen assets. If the banks can be in a position to stop whether public officials or private persons from undertaking wrongful actions, then gatekeeper responsibility can be a tool for regulating those banks. So essentially, I will go back to Fola's book as to the need for us to think differently in terms of regulating banks. We don't need to copy everything wholesale. We should copy what we can adapt. And we can be able to design what suits our context, place, time, interest, ideology. So thank you so much. I'm sorry, I think I've taken more time than I planned, but I welcome questions and comments. Thank you.
Well, if this had been in a room where we were all sat, I'm sure you would have received a resounding round of applause for that. And I can already see the applauses coming through. That was, very interesting for me. I never thought that I would come into a space where we were discussing banking and start hearing about TWAIL and hearing about new institutionalism. This is not it's not an investment or international economic law forum. So that's really interesting. With that, I would open up the floor, see whether there are any questions from anyone for Professor Osuji. If there are any, please, could you raise your hand? And while people, so there's a question, a hand raised by Mr. Umar. If you could please unmute yourself, and it would be great if you turned on your video as well and ask your question. Thank you.
I think my video is on protest. Anyway, thank you very much, and thank you for the presentation. I just wanted to get a clarity. Whether Professor is then advocating for the decentralization of regulation, whether you are also positing that there are no universally, globally acceptable principles when it comes to regulation that should more or less be unison globally, and that there are other types of equally global, or rather equally important standards that can be applied at the national level that can contend with any global standard. Is that what you're advocating? Let me just get it clear. Thank you.
Okay, thank you very much, Mr. Umar. Um, I think my presentation is really to, my position is that we have to think really about our context. That solutions proposed, whether universal or from a particular jurisdiction or a particular region, may not suit us. So we have to ensure that we understand our environment first before copying. At the same time, let me move a little bit to the area of human rights. There are certain aspects of human rights everyone would understand as universal. Those aspects are not context specific. So, irrespective of people's belief, most people would say, look, this is a matter of human rights. So going back to banking, there are certain aspects of banking regulation that one would see as core to banking regulation, universal. So we talk about financial stability. We can also talk about credit, responsible lending. Those things should be universal. Those things should be universal. But there are, at the same time, like I gave the example of Russia's invasion of Ukraine. We have different countries. Most countries of the world share the same view that the actions of President Putin are very wrong under international law, under common sense, under any sense of morality. But the reactions of governments are different. So they are different. So, you see national interest coming in different ways. Hence, the reactions of some of the businesses, including banks, have also been different. So if one is to ask me, to give an expression to my view is simply localization. So a mix of both global standards and local standards that would suit your context. Thank you.
Do we have any further questions for Professor Suji? Well, okay, Professor, I will ask you my own question. Is it your position, therefore, that perhaps law or research should not be conducted within this quite homogeneous specialization or specialisms that on which we have been taught? but that we should take a more interdisciplinary, more contextual approach to the study of law, because you haven't simply talked about banking regulation today. You've talked about an approach to regulation that takes into consideration political, social, and moral choice. And that is what should inform the manner in which banks and other institutions conduct themselves. That's one part of the question. The slight challenge then would be that perhaps we already are living that life because capitalism is a political choice. Therefore, the manner in which banks have conducted themselves so far have been the result of political choice. So we're already doing that, which you are asking us to do. Would you not agree? And Virag, I see your hand up, and I will take your question right after this.
Okay, let me start with capitalism. Sometimes I ask myself, what is capitalism? I end up understanding that there are different shades of capitalism. And I also understand that no nation on this planet actually practices pure capitalism. So that's the way I see it. No nation practices it.
Yeah.
So there are interventions here and there. And those interventions can be from different factors. So, you go back to what you are looking at. Some of them can be moral. Some of them can be because of religious factors. Some of them can be ethical, environmental factors. So if we look at UK, for instance, the US, and most of Western Europe, you will see they're all capitalist nations, but they've got different things going on, and they're not the same. So the same way I would think in terms of banks, that one looking at the banks should also see that within the framework of banking regulation, there should be room for different shades. And if you try to uproot the US model of capitalism and try to put it somewhere like Denmark, it's not going to work. Those Scandinavian countries, they're all capitalist. And what we see in scholarship a lot of times is, particularly in the developing and emerging markets, taking models, approaches that have worked elsewhere very well, effectively, no doubt, and assuming that they would automatically work in a different context. So that's what I am trying to interrogate. And why don't they work? They don't work because of some of these factors, including the moral factor, the environmental factor. So in order to be, as law researchers, in order to be more effective, more convincing, we may be able to design our proposals, but also think, can our proposals work where we want them to operate? So that's where I stand. Thank you.
All right, thank you very much. Virag, yours will be the last question that we will take for this segment, so over to you.
Thank you so much. I've already learned so much today. My question would be, where do you see the line between self-regulation and regulation, and what role do you think self-regulation can really have? Because in my understanding, CSR really belongs to that segment of regulation, and I wouldn't really call self-regulation regulation because of its nature. Thank you.
Okay, thank you. I don't quite see corporate social responsibility as pure self-regulation. In my writings, I've tried to demonstrate that the notion of CSR started as a method of self-regulation. Before legal scholars got in, it was a management concept and on and on. But at the same time, despite that origin, despite that understanding, the law can have different ways to intervene in order to make CSR more effective. So for instance, one clear example can be if a business is making a statement, social statement, then the law can make a provision to say, okay, nobody has forced you to make this statement. But if you make this statement, there are consequences, legal consequences. And if you understand that some of the statements are not quite voluntary, sometimes people think CSR is so voluntary. They can arise as a result of pressure from different segments of society. So because of the pressures, business will still feel compelled to make the statements. The law can intervene to say, yes, you can make the statements, but there are consequences. So let's go back to Russia invasion of Kuwait. So those businesses say, oh, we pulled out, we are unwinding our operations. What if it turns out tomorrow they haven't actually done that? But we consumers, their customers, we've been clapping for what they've done. What are we going to do? If the law says, okay, for such a statement, we can take action, or some other person can take action, then that is the way the law is promoting CSR while respecting its self-regulatory or voluntary nature. So that's one example. So they can work together, essentially. Thank you.
Thank you very much. And with that, I will thank you, Professor Suji, for that really insightful keynote that you have given to us today. It certainly has thrown up lots of issues for further thought, and we hope to welcome you sometime in the future to talk more about your perspective. Thank you very much, and I'm sure everyone joins me in thanking Professor Suji. Thank you. So with that, we move on to the second segment of today's book launch, which is the panel. And I've already told you that we have 3 panelists. I can see that Dr. Mao is raring to go, but before he starts, I'm just going to give you a bit more insight into the background of our 3 eminent speakers for today's panel. So Dr. Mao is a reader, as we've said, at the Sussex School of Law, and he's an author of the African Union Law. I totally enjoyed the book launch for that earlier in the year. The book is titled African Union Law, The Emergence of a Sui Generis Legal Order, published by Routledge, and Corporate Social Responsibility, Human Rights and the Law, Multinational Corporations in Developing Countries, which was also published by Routledge, and the recent co-edited book, which is The Emergent African Union Law, Conceptualizing Delimitation and Application, by the Oxford University Press, which was, I think, the one I attended. Right after him, Professor, I think I should introduce him as the Professor Andy Campbell, who we've already said is an emeritus professor at the University of Leeds, and his research interests in the area of banking and finance, special emphasis on bank insolvency, bank regulation, protection of bank depositors, Islamic banking, money laundering, anything to do with finance and banking. Professor Professor Campbell is your man. He will be talking to us about some of the broader issues. And then bringing up the rear or taking us home will be Ibukun Omishere, who is a doctoral researcher at the School of Law, University of Leeds. Ibukun is interested in the role of corporate governance and corporate social responsibility in emerging economies. Her PhD research is on the links between corporate governance and environmental sustainability amongst multinational companies in West Africa. Between them, these three people have attended so many schools and won so many awards that if I started along that path, we're not going to get to it today. So Dr. Mao, over to you.
Thank you very much. I hope you can hear me all right.
Loud and clear.
Thank you very much, Dr. Adebola, for that kind introduction. And thanks for organizing this event. And I would also want to thank Dr. Adeyemo for inviting me, and congratulations once again on the publication of this very important book. And I also want to say hi to my co-panelists. Well, before I say that, thanks to Professor Osuji for that keynote, exciting and interesting keynote address. And I also want to say hi to my co-panelist, Professor Campbell. It's been a while, but it's good to see you again. And also to our soon-to-be Dr. Ibukun Omishere. Yeah, I'm sure that's going to be our next erudite scholar in the making. So thank you very much for having me here. So today I'm going to be, talking briefly about the book itself. But I'm quite excited about this book because it's kind of like fit into one of the aims of what I do with my research, especially around African Union law. And the idea is to bring, legal developments in Africa to the wider audience, to say that we have something to contribute, to the global issues around, this type of important, regulatory framework that have international dimension. So I'm quite excited to see this book being published, that is bringing to the Global Forum regulatory development in the context of Nigeria, and how that also kind of play into the international regulatory framework when it comes to banking regulation. And again, as I will mention later on, the book drew insight from a lot of areas that I think will be very significant going forward. And I must say that, look, I've had, some kind of attachment to this book from the conception as a PhD proposer years back. And I could see from then that it is an idea that have important contribution to make, that one could explore, not only for a PhD, but beyond. And this is what is coming into life now, because now this book is moving the PhD research that was done by Fola Adeyemo in this area to a global audience, and it is really good to see. This book is important for many reasons, and I've highlighted some of those reasons on my slide. And let me just say, I don't have too many slides, so I'm not going to take too much of your time. Now, banking regulation, as we all probably know, is a very complex area, and it's a constantly changing area. So navigating banking regulation is quite a big challenge. And I think from the developing countries' perspective, it is even more challenging because you are not only dealing with banking regulation, but you're also dealing with the peculiar nature of such countries and their history. Because if you look into the book, and this is quite significant, it looks at banking regulation from its historical context, from when it was introduced pre-colonial times, the colonial times, how that evolved into the time when Nigeria became independent, and how changes were made to the regulatory landscape, and how that is fitting in with today's situation. So it is a lot of complex issues to grapple with, which I think the author has done a great job, in pulling together and highlighting the important lesson to take from this complex dynamic that developed over a long period of time. Also, when you look at banking regulation across Africa and in the context of Nigeria, there's very limited research that is going on or that has been done in this area. So one could see this area as being under-researched. And that means there's an important gap that needs to be filled. And I think this book has done a great job in trying to fit or to fill this particular gap that I think will not only be important in the context of African countries, but other developing countries and even developed countries will have things to learn from these developments. And it is also important to bear in mind the context that we're dealing with here. Nigeria is the largest economy in Africa. The population is, probably the largest in Africa. And which means when it comes to banking, there's a huge market for banking in Nigeria. But when you look at the data on the number of people that have access, to banking services, it is still quite limited for such a context. So, looking at issues like why some people cannot access banking services, what are the limitations on this? What role can emerging technologies like the internet play or mobile banking play? All of these are important issues that the book has presented in a way that we could draw lesson on how to move things forward. So the book did a very good job of looking at the socio-political and economic context in which regulation is evolving and developing in Nigeria. And as Professor Osigi mentioned earlier, there are certain challenges that has affected development in the Nigerian banking sector over time, like bank failures, response to the financial crisis, and so on and so forth. And I think the book also highlights these important issues and also profile options of how a regulator, like in the case of Nigeria or other developing countries, could address this issue in a much more robust way. So, as I mentioned earlier, the book not only look at what is happening in Nigeria, but also draw insight from useful insight from other developing countries, and some of the areas in which ideas were brought into the book that could be useful when it comes to the broad overall regulation of companies are things like the role of central bank, the role of central banks or equivalents. What role should they play, as regulators or part of the regulators within the system? And also in analyzing the core banking regulation in Nigeria, the Banks and Other Financial Institution Act of 2020, the book also teases out the key important principle and what potential reform would be needed in order to improve the situation when you look at the overall regulatory landscape in Nigeria and other similar countries. And importantly, and in order to make this book very useful to other African countries, the author made the effort to look into development in South Africa and also Kenya, and how that compares with the situation in Nigeria. And significantly, the author did not ignore the development in much advanced countries like the United Kingdom and United States. There are still ideas we can learn from them as developing countries. And commendably, the book also highlights some of these ideas. So looking at the future trajectory, one could say that in this important book, there are lessons for regulators. There are lessons that regulators across Africa and beyond can learn on how to approach designing a regulatory framework for banks that will fit the particular context of such countries. And the book also highlights different options that policymakers may want to adopt or may want to look into when it comes to designing and putting into implementation regulatory framework or amendment to existing regulatory framework for banks. And there's comprehensive information in this work from the perspective of Nigeria and the countries, and especially Nigeria, Kenya, and South Africa that were mentioned in the book. There's comprehensive information that other researchers can work with in expanding on some of the themes that were addressed in this book. And the book will also be useful for practitioners, especially in Nigeria, in terms of understanding the regulatory landscape for the purposes of the application of the law. So I would say this book is a solid foundation for future research in the area of banking regulation, especially in the context of developing countries. So these are my few words, and thank you very much for inviting me and giving me this opportunity. Congratulations once again. Thank you for your attention.
Thank you very much, Dr. Mao, for that comprehensive review of the book. And I'll pass over to Professor Campbell to broaden out the contextual discussion somewhat.
Hello, everybody. It's wonderful to see so many people here today, especially since the sun is unusually shining outside. And I'm glad to see that Leeds is so well represented today as well. I wrote the preface to the book and was honored to be asked by Fuller to write this. And it was in no way hard work reading this book and writing the preface. It was a great book to read. She has produced a very, very important book at a very important time, I think. It contains, among other things, a great critical analysis of the Banks and Other Financial Institutions Act of 2020, which replaced the old 1991 Act. The point is made that we needed reform to the law in this area. So much had happened in banking during that time, and so much is continuing to happen that we know that there are going to have to be more changes to keep up with these developments over the next few years. Sub-Saharan Africa is an area where people are generally not as well served by banks as in other parts of the world, but that's something that is surely going to change. And I think it's necessary for a lot of work to be done in this whole area of banking and financial services, not just from the legal or regulatory perspective, but from all of the other perspectives as well. I know one of the things I can often be heard to be critical about is the fact that very much the developed world, through the Basel Committee, makes the rules for international capital, for regulation, and so on. And much of what it does doesn't really, in my opinion at least, take into account what is happening in many other parts of the world, especially the developing parts of the world. But this book is about primarily about three countries in sub-Saharan Africa. And those three countries are very well served by what Fuller has done in her book. She obviously has a passion for both banking regulation and developing economies, and that really comes through in the book. It's a fascinating and thought-provoking work. It makes not only an important, but a really original contribution to the literature in this area. And I should say at this point that she's not sitting on her laurels either, but continuing to do further work in all sorts of aspects of banking, financial services in sub-Saharan Africa. And I'm very delighted and honored again, I should say, to be working with her on one of the projects that she's involved with at the moment. To go back to what Femi was saying there, I hope that this scholarly work is going to find a very wide audience drawn from not only academia, but also government officials, regulators, central bankers, commercial bankers, and lawyers in the financial sector. I think it's important that it reaches a lot of these people. Unfortunately, academic books don't always manage to get to that sort of audience, but this book certainly deserves to. She really expertly guides the reader through all of the relevant issues. And as I think I've already mentioned, I think it's a very well written book which covers the relevant issues in a way in which they haven't been covered before. So I'm not going to go on too much about the details of the book because I want everybody who's here today to read the book rather than listen to people like me tell you exactly what's in the book. But I read it, I loved it. I think it does make this great contribution. And it's great to see so many academics here today who obviously have an interest in this area. It's very important. Further work needs to be done. That's very much recognized by the author of this particular book, and she will be continuing to work on it. So I'd like to just finish by congratulating Fola on this wonderful achievement, and I wish her every success with it. So thank you very much.
Thank you very much, Professor Campbell. And we all agree with you about Fola's contribution, as well as our hard work, actually. Ibuku, we now pass on to you. Please, while Ibuku makes her presentation, please listen attentively to her, but also pull together the questions that we will all, our opportunity to grill Fola comes right after Ibuku's presentation. Ibuku, over to you.
Hi, everyone. Thank you very much for the opportunity to talk about the book launch. And I'm happy to be here to discuss with fellow panelists who are like highly regarded in my field, starting from Professor Suji to Professor Femi, sorry, to Dr. Femi, yes, Professor Femi, and then Professor Andy Campbell as well. This book is very insightful. Is very, in time, during the salient issues of, the corporate governance practices that we have at the moment in Africa. And I like the fact that the author highlighted not just Nigeria, but also highlighted countries like South Africa and Kenya as well, who share, similar issues in terms of the banking regulation sphere as a whole. Now, the book tries to, talk about the historical concept. Not many books, that have come across have actually, gone to an in-depth analysis of how corporate governance has worked and its effect. So it tries to, shed light on the fact that, absence of good corporate governance practices actually have a huge effect in terms of, as we can see from the banking crisis that we had in Nigeria, and based on the fact that, if we had sound corporate governance practices in place, for example, Nigeria could have, to a large extent, averted the crisis or maintained the crisis effectively to a large extent. Now, when we talk about corporate governance, tries to talk about how a company is being regulated and controlled. And in this kind of situation, we can see that companies don't exist in isolation. Now, a bank is also a business. And then this book tries to shed light on the role of business and society. And this brings up, to a large extent, sustainability, because if we have bad corporate governance practices, how will sustainability thrive, for example? So the book tries to solidify the fact that we need strict regulations, and I like how the author tries to analyze the fact that the aim of the book is not to, create laws that will serve as some sort of reactive measure, but actually proactive, meaning that it sought to take steps to prevent, this crisis or problems from occurring, in the first place. And this brings us to the issue of, the agency theory, the role of directors in trying to ensure that they manage the interests of the company. Now, in looking at the absence of sound corporate governance practice, we can see that in the Nigerian crisis, about 8 directors were sacked due to the corruption in place. And if we had, effective sound corporate governance practices, then the CBN, which is regarded as a central regulator, would have taken special care rather than creating knee-jerk reactions in the form of creating the NDIC, that's the National Deposit Insurance Scheme, and also creating AMCON as well to save the day. However, these institutions, they took good steps to actually, salvage the issue, but it wasn't as effective as it ought to be. And then, and in this kind of situation where we still have, unfortunately, we still have like weak regulatory sphere. On the other hand, some have argued that we should leave it to, to the bank to regulate themselves. Now, if we leave bank to regulate themselves and rely on market pressures, as we can see again from the financial crisis, market pressures alone cannot handle the financial crisis and the problems we face in corporate governance. We need strict regulation, which in terms of the fact that I realized that the author actually highlighted the importance of having a supervisory role. So not only should companies or regulations, have the laws in place, but we need, some sort of implementation to ensure that we have good laws, and then we have good regulators that are actually ensuring that the laws are effective on its own. And I think one of the crucial parts of the book is, in terms of the financial crisis, was the fact that, the book, although the book took steps to highlight the financial crisis, but then in the situation of the fact that this financial crisis didn't just affect the shareholders, like many people believe, it also affected stakeholders. We have the supply chains, we have the employees, even the environment as a whole. So, the book has is set as a solid foundation, but it has more steps to achieve. In fact, of highlighting the fact that, we also need to talk about how stakeholders were being affected as a result of the financial crisis, and to what extent has this new laws, for example, the Bofia Act 2020, has taken steps to incorporate some stakeholders' interests, into consideration, because one of the role of business is to not only pay attention to the interests of shareholders, but to also pay attention to the interests of other stakeholders that are affected by the decisions of the banks, for example. In the recent case of the climate change issue, as at 2 days ago, where Client Earth sued directors for being personally liable for not drawing up an appropriate scheme in terms of the net zero emission. So we can see now that there's a shift. Now, corporate governance is not only seen as a tool to serve shareholders' interests, which has equally led to managerial opportunism in the Nigerian sphere, but is also viewed as a tool to actually, broaden their horizon to paying attention to environmental issues. And also the fact that I'm very impressed with the fact that the book highlights that, Nigeria shouldn't just get into transplantation automatically, but looking at the US and UK models, Nigeria can create an effective model, not a perfect model, but paying attention to the different situations in this country and actually taking steps to implement them, because there's no perfect model. And also, the book tries to provide solution in terms of having a great audit system. Now, when we talk about audit, we have financial reporting and we have the non-financial reporting. Now, the CBN initially, in terms of engaging in effective and active auditing, it was a discretionary work. But over time, making it mandatory would, to a large extent, ensure that we have effective, good corporate governance practices, whereby directors are clearly, and even managers as a whole, are clearly aware of the fact that they need to produce a report which will be adequately, audited by the CBN as the central regulator. And if we had, a strong financial service authority, we might not have needed the creation of AMCON in the first place. So getting into, the auditing situation actually ensures that companies as a whole, and also banks as a whole, take into account, the loopholes that may actually, avert the crisis in the first place. And another issue that actually caused the banking crisis in 2008 was the global financial crisis that, that was mentioned earlier, is the fact that, banks felt that Nigerian companies weren't going to be affected in the first place. But over time, it was found out that, because of the connectedness of banks and the fact that, like I said earlier, businesses don't exist in isolation. Investors are seen as a strong link to actually serve as a crucial tool to bring forth this interconnectedness. And this affected the Nigerian sphere because we had, weak regulation in place. So I'm very, and I congratulate the author for this very interesting and insightful book, bringing out the effects of, weak corporate governance practice, and also suggesting ways and actually effective ways of actually providing solutions to ensuring that the Nigerian banking regulation is stronger, and in the process of being stronger can actually give space for other sustainability issues to be considered. Because like I said earlier, if we have weak governance regulation, if we have weak banking regulation, then there won't be any, effective, environment for CSR or stakeholder interest to be considered as a whole. So I'll encourage everyone. I've read the book. I find it very easy to read and very straightforward as well, very clear and very, well explanatory. And I advise everyone to try and get the book. Congratulations again to the author, Fola.
Thank you very much, Ibuko. I was trying to keep pace with your speaking, and that's not the easiest thing to do. That was really interesting. Thank you for that. Whistle stop tour through governance issues that arise in banking and financial regulation. And it has, for me, triggered so many questions, that some of which I'm hoping that Fola would answer perhaps here or in private when next I get to see her. So we get to I suppose, the business end of things, where everyone gets to ask Fola questions or to make comments about their thoughts on the book. While we sort out our questions for Fola, I'm going to start off here. I hope you have a pen ready, because I have had time to reflect on some of the questions that I want to ask you. So the first
This feels like a mini Viva. My goodness.
Well.
I wasn't this nervous for my Viva, but yes, I will answer to the best of my ability.
Okay, the first one is it's a multi-barreled question. So perhaps, pen to the ready. And part of it is flows from, the thoughts that Professor Suji brought to the table, and I think that Ibukun has also ended with, which is Nigeria's approach to banking regulation. So you said, and as Ibukun has echoed, that Nigeria has a predominantly reactive approach to banking, which has been ineffective. So my questions that flow from that are these. One, is this characteristic only of the Nigerian approach, or characteristic only of the African approach? You've told us that we shouldn't just look to the West. Surely, I think one could argue that even Western countries have had a largely reactive approach. If they had been proactive, as you're advocating, perhaps the financial crisis that we had would not have occurred. So that one then begins to wonder why you ask us to look at these economies. Would you say, given BOFIA 2020 and the changes that it introduced, that Nigeria has been transformed from a reactive regulatory system to one that is proactive? Would you also then say, given the studies that you have conducted on the Western approaches, and since you say we should borrow from them, would you say that they have also transformed their systems from this reactive regulatory approach to a more proactive approach? If you don't think that there has been, or that these changes have occurred, then what remains? So I'll just give you time to, I think, reflect on that and call on Mr. Omar. Your hand is up.
Okay.
So you start with Mr. Omar's question. What do you think?
Sorry, thank you very much. I think I would just want to also congratulate Dr. Fola for the good work done. I didn't have the extraordinary privilege of going through the book, but I was sent a teaser, which I swallowed wholeheartedly like a snake. And I think what really amazed me, I think, reading at the teaser, was the historical evolution of regulation in Nigeria. I think we should not forget the fact that Nigeria has a tradition, and that tradition is British tradition, and which only means that Nigeria was looking up to the British in a way, and by extension looking up to the West to provide general guidance when it comes to the issue of regulation. More or less, Nigeria is a second player that has grown to become a middle field player. And then you are asking Nigeria now to be actually scoring the goals. I think that's what you are trying to say. But I think Nigeria has grown. We have to acknowledge that. And I think the issue of evolution has brought to the fore. Should regulation be a matter of evolution or a matter of revolution? And it is very clear that because of the conservative nature of regulation and the issue of assets and money, taking risks will only come at the rarest opportunity. It shouldn't be an everyday thing when you are dealing with people's assets. So we can almost essentially believe that in regulation, someone has to be conservative unless you can run on your feet and on your hands, which the Western world tend to do. So dynamic governance is very critical, but it shouldn't be at the expense of trust. Now, with regard to trust, I think one point that I have noted is that the trust factor is always critical in our region. People, it's not that people don't trust the banks to keep their money. Actually, people don't trust that there is somebody there who will get back their money if anything go wrong. That is primarily why people don't trust the banks. It's not because they don't trust the banks. It's just that there is nobody there watching their money. And so when you see strong regulation, it only means that the government is trying to increase the level of trust between the people and the banking sector, or whatever financial sector, generally speaking. So you need to also appreciate the fact that the role of the government there is critical in building the trust that is essential in bringing the clientele from the unbanked to the banked or to the financial sector. So my own general contribution is to ask, for example, how can we ensure that we have a balance between a proactive governance as well as the issue of maintaining the leverage of trust with the people? That is very, very important for us. And I think that's where we falter, those of us who are to ensure compliance globally. So, so my last point has to do with the issue of, okay, so all of this is there. What happens when you have a rupture, as we do today, with regards to fintech and the emergence of cryptos? So what happens to regulation when the regulators are busy chasing innovation and they are unable to catch it? Where do you place regulation at this point? Thank you.
Okay, this is like a mini Viva, but I'm going to start with Bolanle's question first, I think. So you were asking about the characteristics, if I'm not mistaken, of the Nigerian approach. So let me start by saying this. So in the book, what I did is to discuss or to use the UK and the US as comparative jurisdictions, and also to use that to explore their own history of banking failures and crisis. So yes, there are some recorded ones, but when you're looking at it in comparison to Nigeria, you won't say that there are that many. And I know that Kenya and Uganda, for example, other African countries have also had their fair share of failures. I think the responsive method, so if I start off with the UK and then I want to zoom in or focus more on Nigeria. So in the case of the UK, we had the Parliamentary Commission on Banking Standards, which specifically identified those issues. And then we also had the Turner Review, which offered practical insights and mechanisms as to the way forward. We also then had the introduction of this Twin Peaks regulatory system that we have in the UK, which is obviously the PRA and the FCA, and this recognition that we need to protect consumers, especially in the larger scheme of the financial architecture. Now, if we look at the Nigerian position, I would say that historically Nigeria has a very poor track record of regulation. And this is since its inception into banking into the country. In the much earlier chapters, so I think it was in chapter 3, if I'm not mistaken, I started to talk about the introduction of indigenous and colonial banking into the system. And what we found here is that many of these indigenous banks, they were being created and then they failed. Being created and then they failed. And rather than look to see, okay, what is the issue here? What kind of structures can we put in place? We just saw new emergence of banks and the new creation of banks. Now, if we move away from that, subsequently, I think in 1958, we had the creation of the Central Bank of Nigeria. And obviously, this recognized that, look, we need some identifiable institution that can take on the responsibility of regulating and supervising banks. But even though we had this creation of this institution, we still had subsequent failures. And I'll probably just touch on one or two of them. So in 1986, we had the Structural Adjustment Program, which was brought in as a a mechanism, if you like, to address the inherent bank failures that we had at the time. But this program was only introduced when the banking failures had reached its peak. So rather than having proactive monitoring of the banks, of the system, of regulation, etc., it was only until it got to a point where it was like, look, we need to now fix this and react to these banking failures. And then, of course, subsequently, the deregulation caused the expansion of more banks in Nigeria, which then led to the NDIC decree in 1988. If I'm not mistaken, I think Nigeria followed suit from Kenya, because I think they created their own deposit insurance scheme, I think in 1985, if I'm not mistaken. But again, the creation of the NDIC was a response to this large volume of distressed banks in the system. Now, it's not unusual for banks to fail, okay? I mean, if you have a banking, there's always that risk that there's going to be a failure. But from the research and from what we see now, I'm not sure that there was an honest conversation as to pinpointing, well, why do we specifically as a country, or African countries, have this really high number of banking failures? And I think it was highlighted, I think Ibukum made mention of this previously, actually. The CBN doesn't engage in regular checks of the banks to check their financial health, to check that all is well. And perhaps these are some of the measures that one would expect a responsible regulator such as the CBN to engage in. So following the deregulation, I think we also had the banking failures weren't cured by the creation of this NDIC decree. And so subsequently after that, we introduced the Failed Banks Recovery Debt Decree in 1994, if I'm not mistaken. And this was the creation of a special court to recuperate debts which have been owed to a failed banks. Now, Professor Chibuke Uche, I hope I have not murdered his name, he wrote a fantastic piece specifically on that and on the creation of this specific court. And what we now see is actually elements of this specific court have now been transposed into BOFIA 2020. But of course, this failed decrees tribunal in 94 was dissolved with the creation or the introduction of the democratic government in 1999. Sorry, this does feel like a viper, but I'm coming. Okay. Then subsequently in 2004, we had another bout of a high number of banks. And again, the response only after it reached its peak was this whole idea of recapitalizing. And so the CBN asked all of these banks to recapitalize their share capital base to 25 million naira without actually engaging in, okay, what is the issue for these failures? How can we improve the regulatory environment for these banks so that they're not failing? And so, they asked them to recapitalize, and that was their method of regulating the banks in the system. And then in 2008, we had the Nigerian crisis induced by the global financial crisis. There's quite a lot of commentary on this area, really good commentary. So I know that Dr. Famuyiwa had written a piece which interrogates a specific issue, but more importantly, they're both very good pieces, but specifically, Dr. Ewa Salami wrote a piece, I think it's called in a proper regulatory response. And in that piece, she actually shares similar observations that I have captured in this book, in that Nigeria specifically doesn't need to wait for a crisis to happen before it ensures that it has a good regulatory environment for the banks. So to answer your question, there are no regular inspections for banks in Nigeria. These are only prompted when there is a crisis. So you heard Ibukun talk about the creation of AMCON. It was only because there was a crisis, not because they're engaging in regular checks to maintain and check the position of these banks and their financial health. I think the next part of your question, you talked about BOFIA. Am I mistaken? You talked about whether—
Well, I asked if BOFIA had transformed that regulatory approach to more proactive one then.
So I'll just share some insights on that. I think BOFIA is a welcomed act. It's definitely an overdue act, and it's definitely welcomed in somewhat into the regulatory space. I think it shows some forward thinking on the part of the regulator, because now we have this recognition for the need to regulate fintech companies, for example, and things like the global crisis, the COVID-19 pandemic. So I think it's definitely forward thinking in that respect. In terms of whether it's transformed our approach, there are now some changes into the way that I say we as if I'm part of them, but how banks are licensed and how their licenses are revoked. So there are some specific sections which really take that into consideration. And again, there's recognition that we need to regulate fintech companies. And this creation of this special tribunal, which was similar to the tribunal that was created in 1994. I think it's a little bit early to comment on the impact of the act on cases now. And I say this because, I mean, Nigeria's relationship in terms of trials and the court procedures, you always have delayed trials, you have lethargic court hearings, and you have sluggish court procedures. So I'm not sure that we can necessarily, I know, Bolanle, I love Nigeria, I do, but I think these are some
I just know that Justice Dimba, signed into the meeting. I'm wondering if he's
Hi, Justice Dimba. So yes, I mean, I think it's slightly early to tell whether the real impacts of the act itself. But having said that, I think we can't ignore some of the issues that it has introduced. So now what BUFIA 2020 does is to limit the role of the NDIC in the resolution of banks. So that is, you could say, problematic. And also it changes now the way that we license banks and revoke their licenses. So I hope I've captured in my answer Mr. Umar's comments and observations and yours together.
Well, you've certainly answered mine. Mr. Umar, has she answered your question?
No, don't ask him. Don't ask him.
Please don't ask me. Let's go on.
Okay. We are happy to take any further questions for Fola as to any part of the book. Yes, Vera. Am I pronouncing your name properly? Could you pronounce it?
Yes, I would have the same question regarding many of your names, but your pronunciation is perfect. Thank you so much. I would like to learn a little bit about the market structure in Nigeria, whether there are many smaller banks or a couple of big banks. I myself researched the reason for bank failures, and my take home was that actually they happen quite rarely. Usually banks fail when their clients fail. So that just underlines how important is a strong consumer protection in financial regulation. Thank you.
Thank you. Fola, if you could just note that down, and then we take Hamis's, well, Hamis seems to be talking to someone else. If we could take Hamis's question, and if I could implore you, Fola, to keep the answers short and sweet.
Bolanle, I can hear you, okay? I can hear you. Unfortunately, the meeting coincided with a departmental meeting. So I was in a boardroom, and then now I'm back in my office. But I've been following, and yeah, so can I now ask my question? By the way, thank you very much to everyone who has attended. It's been amazing. The discussions have been on point and all that. But I just have one stupid question, and I love asking stupid questions. Now, Fola, well done on the book. I mean, all I need you to tell me in 1 minute, what do you think is the biggest which is the most critical aspect of your book in one sentence? Because for me, that's the selling point. What do you think is the most critical aspect or contributory aspect of your book to the field of banking regulation, especially in Africa?
Okay. I think the most critical aspect for me of the book is I'm essentially saying that the CBN does not regulate well enough. I don't know how well that has been received because no institution likes to be criticized to say that it's not doing its job properly. So I think for me, that might be the most critical aspect. There have been some previous arguments. I'll keep my answer short, Balani, and I'll answer Varek's question too. There have been some calls to separate the powers of the CBN. But as one can imagine, no institution will willingly want to give up its powers. But in it giving up its powers, and again, not necessarily adopting the UK approach, but South Africa, for example, has a Twin Peaks approach, and that seems to be working well for them. So that might be something for Nigeria to consider. Varek's question, we have a mixture of banks in the system. We have large banks, mostly large banks, I would say, but we have some other banks. We have microfinance banks as well. So it's kind of a mixture. I hope I've answered your question.
Also, do you know about the ownership structure? So is it dominated by foreign owners, or is it more balanced?
Well, I wouldn't say it's really I wouldn't really say there's foreign ownership. I wouldn't say that there aren't any foreign owned banks, but I think it's a good balance between the two. Yeah.
Thank you so much, and congratulations.
Thank you. Thank you so much.
Okay, Hamisi, I think you can sneak in your follow-up question. And if there's any last question, I'll reserve my further questions for you privately so that we can round this up within the hour. I'll take Hamisi's follow-on question. And if there's any follow-on question, please raise your hand so that I can take it quickly.
So the following question is also short. I mean, I was reading the book, especially on the role of the CBN. Reminded me when I was doing the work on the role of the central bank in financial distress resolution in emerging economies. And I was looking at the Central Bank of Uganda. And as you say, it doesn't want to relinquish power. But for example, when it couldn't manage deposit funds, they had to set up the Deposit Insurance Fund of Uganda, and they took away the oversight of that agency from the Central Bank of Uganda to set up a new independent entity to regulate deposit protection in Uganda. But the question is, currently in Nigeria, are there any ongoing reform to the role or the powers of the CBN that could make your book one of the key contributors to the reform in that area? I mean, are there any maybe papers or motions tabled in Parliament or any agencies calling for the reform into the role of the central bank in the regulation of the financial system in Nigeria?
So there aren't any specifically now, but there are some discussions, I would say, as to whether the CBN would at least like to give up some of its powers. I know that the NDIC, so with BOFIA 2020 now that they've limited the role of the NDIC, I wouldn't say it makes the NDIC redundant, but certainly they have to amend their Act of 2006 in that respect. So to answer your question, there aren't any plans at the moment, but there are some discussions in that perhaps it is time for them to relinquish some of their powers.
All right, thank you very much, and well done on the book. It's beautiful.
Thank you. Thank you.
Well, thank you. I don't see any further hands up. So Fola, we will take a statement from you before we close. But while you gather your thoughts together, I will just like to tell everyone that we have structured the discussions around Fola's book in a way that ensures that we can unpack the various aspects of the book. So we've talked about the role of the judiciary and in bank regulation in Nigeria, and the very next discussion would be the judicial approach towards Nigerian banking cases, which will take place in April, and we'll send the notice and the registration links round. And Hamisi has talked about, sharing the power of the central bank and the role of the NDIC. So there will be a discussion on the role of the NDIC in light of the BOFIA 2020. We will also have fireside chats with key regulators. So we have Mrs. Hamda Amba and Mrs. Yemisi Edu, and we'll round things off with a practitioner's perspective. I don't know, so there's something in me that wants to push me to just call on Chief Idigwe, because we always call on Chief Idigwe to answer
Yes,
something or the
please
other.
do.
But
Please
I'm going
do.
to leave him for today. We will have a session on the practitioner's perspective of Bofia 2020. And Fola, I hope that you've had time to have a sip of water, and we will take any statement that you have and round things up.
Okay, first of all, I'd like to say a very big thank you to everybody who has come today. I know that, everybody's busy and you've taken time out to come. So I really, really appreciate all of you for coming. I'm really honored. I probably want to start off by just thanking my examiners. I think one of them is here, but they offered some very insightful comments during the Viva and post the Viva, which helped me transform the thesis into a book. I want to thank Dr. Amal for his unwavering guidance and his support. Thank you so much. I couldn't have asked for a better supervisor, to be honest. I know that when he left to go to Sussex for a much well-deserved role, I was really beside myself. I was like, oh, he should pack me in the suitcase and take me. How am I going to finish this PhD? But, he even supervised me from afar. And I remember I would send him a message or call him and be like, look, I don't know that I want to do this PhD anymore. I'm tired. I'm just in a very difficult place. And he always just knew how to kind of make me feel secure and calm. And he was always willing to answer my questions, even when I thought that they would be really silly ones. So thank you so much. Thank you so much to Professor Andy Campbell. So we first met in 2019 at the BIDE conference that I organized with Dr. Akintola. And since that time, honestly, I can go to Professor Campbell for anything, and he always has time for me. And so he's just been an invaluable source of support for me. And I just really, really thank you so much for that. Thank you so much to Professor Onyeka for delivering the keynotes. I am so grateful. I'm so grateful. I found myself writing down a couple of notes as you were delivering. I thought, oh, this is really insightful. I didn't think of it like that. So I just want to thank you so much for honoring my invitation. I really appreciate that. I'd like to thank my family. One is upstairs, and my sister's at work, and one of my cousins is online. I had some bad days during the PhD process. So there were days where I didn't want to talk to anyone, and they just always made themselves available and just understood that, okay, Fola's just going through something now. But, they were always there as a good source of support. So I'm really grateful to them. I want to thank my partner. Transforming the thesis to a book was a really long journey for me. We experienced the death in our family. And so it was a period where I was just like, I can't write anything. And he was just always so supportive. Always, there was one time he would call me and say, look, Fola, you haven't written this chapter, get on with it and start doing it now. So he really is my cheerleader, and I'm so grateful to him. And then my friends and my colleagues, I'm going to start off with Dr. Adebola, who until very recently would not refer to me as her friend. But I think if you're my friend, you're not just my colleague. But yeah, I contacted her during my PhD, and it was a frantic time is all I can say. And yeah, she was a very big source of support for me, even in getting my role for Reading. She was very helpful. She would do interview prep with me. She'd be like, okay, answer it this way and think about this. So she's honestly been a very, very big source of support for me. I thank you for hosting these sessions. I thank you for making time out for me. I really thank you. Sending you very big hugs. And then my other friends who are also on the call, there's Lovina, Nkechi, Joy, Lucky Star. We're all members of GISDEC, which is the Global South Dialogue on Economic Crime, and Ibukuntu. Thank you so much for taking time out today to deliver your presentation. I really, really enjoyed it. It was so well prepared. I just loved it. So thank you so much. Thank you to my friends as well. Thank you for making time out for Fola's crazy days. I really appreciate you. And my students who are on the call. So I can see that Vu is here. I saw Vicky, I think, and a few other people. I can see Adeola's here. She's not my student, but I'm really grateful that you're here. And yeah, that's pretty much it, I think. The discount code is in the chat. They don't pay us authors very well, so please buy the book. And I hope that you enjoy the book. And if you enjoy it, buy for another person too. Chief, I can see that you are here. I'm sending you like 5 copies and the bill. So bring out your Naira and your pounds, please. Thank you. Thank you so much.
Okay, Fola, thank you very much. And it's been, well, a delight having you on board. We look forward to seeing you all at another of our events. I'd like to say thank you very much to Professor Suji again for that awesome keynote. I'd like to thank Dr. Mao, Professor Campbell, and Ms. soon-to-be Dr. Omishore for their contributions as well. Thank you to everyone who was asked a question, who was dialed in today and stayed. Virtually everyone has stayed until the very end. We were concerned that people would run off after 15 minutes, but that must be a testament to how interesting the conversation has been. Thank you very much, and I hope to see you all soon sometime. So I'll just leave the video running on for a while if you want to, unmute yourselves to say hi to Fola, but in the meantime, I'll stop the recording. Thank you all.
I think Hamisi